Yo, hello everyone. My name is Sebonga Forex Lover. Welcome back to my channel. So, first and foremost, let me thank everyone that has subscribed to my channel. I have recently reached 100 subscribers, and that brings more joy to me because every YouTube subscriber starts from 100 to hundreds. You know what I mean? So today I have decided to create a video for total beginners. Okay, so if you are a forex beginner, you've recently discovered forex, then this video is for you. If you are a forex beginner, you have read the Baby Peeps PDF guide for beginners. Maybe you are halfway through the beginners book, so this one is a video for you. This video, if you are an experienced trader, don't just pass this video. Make sure that you share this video with your students. Make sure you share this video with everybody who are new to the forex. Okay, so let's dive straight to it. This is a beginner guide once again by myself. Let us start the presentation. What is forex? The buying and selling of one currency in exchange for another. Okay, that means when you are buying Euro USD, you are exchanging for another currency, which is USD. Buying Euro in exchange for USD. Okay, the forex market is the largest financial market in the world. Okay, so what that means is that forex is not the only financial institution. There are so many other financial market, actually not institution, pardon me. Okay, so let me mention two. There is a stock market, there is commodities, there is futures. That's a bonus. Okay, so forex is the largest on all the three that I have mentioned, financial markets that I have mentioned, and that is why it's called the foreign exchange. Currency pairs. So in the forex markets, we have something called currency pairs. Okay, and these are the types of currency pairs that we have in the forex market. We have major pairs, which are Euro USD, GBP USD, NZD USD, USD CAD, USD JPY, AUD USD, and USD CHF. Those are the 8 major currency pairs. Then the minor currency pairs, we have Euro CHF, Euro JPY, Euro NZD, Euro GBP, Euro AUD, Euro CAD, which is Euro CAD, CHF, JPY, AUD, JPY, GBP, JPY, CAD, JPY, NZD, JPY, GBP, AUD, GBP, CHF, GBP, NZD, and we have lastly exotic pairs, which are USD, HKD, USD Hong Kong dollar, USD Singapore dollar, USD South African rand, which is USD ZAR, my country's currency. Basically, I'm from South Africa, if you didn't know. USD TRY, USD SEC, USD NOK, USD DKK. Alright, so if you are wondering, like, why do I have to know all these currency pairs? You don't have to know this by head, because those are available on the trading platforms that are used by many brokers that offer forex trading services. So we have a broker platform that is called MT4 and MT5. So those pairs are built in within those trading platforms. Yes, that's what I want to say. Trading platforms. So you will find a tab of currency pairs. Then you will choose a currency pair under the platform that you want to trade with. You will find maybe USD CAD, and then you will analyze USD CAD. Maybe you're going to use the technical analysis, and you are going to use fundamental analysis, which is something that I will explain at the end of this video, but it's not part of this presentation. But since I have already mentioned it, so let me just finish it at the end of this video. So stay tuned. What is a pip? A unit of measurement used to express the change in value between two currencies. All right, it is used, the most important, it is used to express the change in value. So the value of a currency pair is constantly going to change. So sometimes the value increases and sometimes the value decreases. So for this case, Euro USD 1.1051, this one in the bracket is the pip. So if the currency, let's say, depreciate by 5 pips, so from this 1.1051, from 1051 minus 5 pips, we have 100, I believe. Okay, if I'm wrong, guys, I'm not a maths guru, I'm not so good with numbers, you'll forgive me. Okay, let us just make an example. If this pair were to appreciate by 5 pips, that means it will move from 1.1051 to 1.052, 1.1053, 1.1054, 1.1055. I hope I'm making sense. If not, don't worry. Most pairs have 4 decimal points, and the yen pairs have 2 decimal points. Okay. What is a lot? Lots are currency blocks or units. A standard lot is 100,000 units of currency. All right. If you maybe lost, why lots? Why 100,000? Why what? Why 10,000? Okay. When you have already have some basic understanding of those pairs that I've mentioned on the previous slide, you will choose one currency pair, and then for you to trade it, you must choose which lot size you are going to use. Obviously, lot size go to deeper to something like, if you're using certain lot size, you will gain more or you will lose more, or you make less or make more, so on and so on and so forth. So what I'm trying to say is, don't try to think deep now about what is a lot. So we have something lot size. We have lot sizes here, which is, we have micro lot, which is 1,000 worth of currency controlled, mini lot 10,000 worth of currency controlled, standard lot 100,000 worth of currency controlled. So for example, like I've mentioned the standard lot, I mentioned it again, which is 100,000 worth of currency controlled. For example, on this Euro USD pair, a micro lot on that pair, specifically Euro USD, is 0.10 per pip, which is 0.10 cents per pip, which is equivalent to 0.01 lot size. Mini lot is quite $1 per pip, which is equivalent to 0.10, actually 0.10 lot size. And we have standard lot size, which is quite $10 per pip, which is equivalent, which is one lot means is equivalent to $10 per pip. Meaning, if you were to buy Euro USD with one lot, maybe you have a $10,000 account. In 10 pips, you have already made like 10, 20, 30, 40, 50. You have made your $100 in your first 10 pips. The bid is the price at which your broker is willing to buy the base currency in exchange for the code currency. Okay, For example, GBP USD. GBP is the base currency, USD is the code currency. When you are new, you are trying to memorize this. The first currency is the base currency. The second currency is the code currency. Try to memorize it like that. And we have something called the ask. Ask is the best available price in which you will buy from the market. So if you want to buy from the market will offer you two kinds of prices, which is the bid price and the ask price. And the difference between the bid price and the ask price is called a spread. In other words, it's like the offer price. Okay, let's move along to the spread. The spread is the difference between the bid and the ask. Example is this this picture that I have here of euro dollar, from that 40 and that 42. You see the difference is 2, which is 2.1 pip, because also have that 40 to the power 7, 42 to the power 8, something like that. So don't think too deep about that. Don't try to confuse yourself. Keep it simple. 40 minus 42 is 2 pips difference in between, which is the difference between the bid and the ask. Okay, we have something called leverage. The ratio of traders' funds to the size of the broker's credit. An example, there is $1,000 equity, then trade size is 10,000, meaning using that 1,000 you can be able to control a trade size that is equivalent to 10,000 US dollars, because leverage is like borrowing from your broker, and it allows you to control a larger trade size, meaning your account size can control a much bigger capital, meaning from $100 you can control 100,000 worth maybe of money. So it can work in your favor or against you. Don't get too excited, because it can work for you, which is you can gain more using that leverage, or you can lose more when using that leverage. So we have something called margin, a deposit required to open and maintain open position. An example, for you to open maybe that 10,000 rand, $10,000. I'm South African, forgive me. Anyway, $10,000, you will need that $333, which is margin required for you to open that or to maintain that position. It can be to open, and also it can be to maintain. Margin is for maintaining, also for opening, which is that deposit. When trading with margin, just remember how much margin is going to be needed to open a position and hold that position. Because sometimes you don't just open a position, you have to hold that position. All right, let's go to swap. Swap is an overnight or rollover interest, and you see, swap can be earned or swap can be paid, which is from your position that you are holding. You can pay swap to your broker, or your broker can pay you back the swap. So that is why some pairs have a negative swap, most of them, meaning many pairs, when you're holding them for like days, you'll be actually charged by your broker for holding that position. And there are some pairs like NZD-USD, which is a privilege, which are I consider them privileged pairs which have a positive swap. In other words, they are designed in such a way that they are paying you money for holding them. If you were to buy NZD-USD on certain brokers, not all brokers in my experience, they are going to pay you money because of holding that currency pair, which is a positive swap. So we have come to almost the end of this presentation. We have trading sessions. This is one of the most important part in your trading journey, or when you are choosing a trading strategy. You must know if your trading strategy works best on which trading session. So there are 4 different trading sessions. We have Frankfurt, we have London, we have New York, we have Tokyo, and all these trading sessions occur on a 24-hour period, if I'm correct. Okay, so we have all these trading sessions one after the other. So different pairs move during different times generally. So if you are going to trade GBP JPY, for instance, you must know, do your research and understand whether GBP JPY move better in London session or New York session, and also know which session are consolidating sessions and which session generally the market move more on. You can move more on London. I don't know, you are going to have to do your research, but out of these 4 sessions, London and New York are there session to consider. London is considered a breakout session, and New York is considered a reversal session. So now let us talk about 2 types of analysis. We have technical analysis. Technical analysis is performed within the MetaTrader platform, whether MetaTrader 4 or within a trading platform in general, because MetaTrader is not the only trading platform. There are trading platforms like Ninja platform and so on and so forth, but it is the type of technical analysis that is being performed within a trading platform, which is a trading platform will offer you tools that you can use to perform technical analysis. Tools like moving averages. If you have seen from my introduction, I had a chat there with moving average, because it's a strategy that I was testing. I just read the PDF, so I was just trying to see maybe if there's something that I can share within this channel. So also we have fundamental analysis, which is you are going to analyze a currency pair fundamentally, which is we are going to go to websites like investing.com. There are so many websites that I won't bother mentioning them here. If you want to know them, comment down in the comment section. You are going to use those websites to analyze the fundamental, which is the news or which is the economy of that particular pair. Maybe you are going to analyze JPY, which is China, analyze what is happening to China. Is there anything that is coming to China, positive, negative, which is going to directly impact the movement of the currency pair that you are going to trade. So I try to keep this video as short as possible, so that you can get exactly straight to the point what I need you, or what is needed for you as a beginner trader to understand. Hopefully, if I have gained your like me more, like this channel, subscribe, share this video with other beginners that you know, maybe your friends, maybe your family. Take care of yourself and stay blessed until the next video.